Hey guys, Robert Roy from WealthBuildersHQ.com here. Two of the most well-known stocks in the market today have stock splits coming out in the next couple of days. Here's what you need to know to be prepared for the trading in the next coming days. So at the end of August, two major stocks announcing, right? Apple is the very first one, the darling of Wall Street. It's the stock everybody loves to love. It's the stock that every trader keeps a focus on a regular basis. It's the only stock that could be its own index, right? Is Apple. They're doing a 4-for-1 split. Then we have Tesla, right? Tesla's the stock that everybody loves because they love to hate Elon Musk, right? He's very controversial and he causes all kinds of problems. The big money on Wall Street hates it because they're in deep and they can't just move in and out as you and I can as interim traders, very short-term traders. But they're doing a 5-for-1 stock split coming up. So let's go through a couple of points about splits. First off, what is a stock split, right? A stock split is when you had a stock, as an example, we'll use an easy number. Let's say XYZ stock is trading at $100 a share. And they announce a 2-for-1 split. What that means is they're going to give you 2 shares for every 1 share you have. Well, Rob, do I have more money then? No. You have the exact same dollar amount in your shares. The difference in there is the value of each stock has been cut in half, 2-for-1. So each share would be worth $50. If it was a 4-for-1, each share would be worth $25. A 10-for-1, each share would be worth $10. You get the idea, right? So why do companies do splits? What makes them go ahead and say, ooh, let's split the stock? There are some great reasons to it. Some would think that it is better for the average person to buy, but the average person is considered small money. That's not what's moving the market. It does help us. That's more of a side benefit. It's somebody comes up with a drug and the drug is for one thing and it fixes something else as well, right? Side benefit from it. That's kind of the same thing with splits being better for you as a smaller investor. What it really does is it starts to build up the number of shares in that company and makes them more of that big giant, that 800-pound gorilla. Apple is that 800-pound gorilla. Dell was a great example. They did so many stock splits. Microsoft did so many stock splits. I don't know if they could ever get away with another one on Microsoft with as many as they did. By the way, if you worked for Microsoft or Dell, let's use Dell. If you worked for Dell from the very first day they started and you were the lowest paying employee in the office, in the business, and then after they had done all of their splits, do you know what they called you? A Dellionaire. Because that's how much money the average Dell employee made from splitting the stock. Dell was very generous with their shares back to their employees that worked for them. You know, you're the ones building the company, we're going to give it back to you. For traders, there's a lot of volatility that comes around the announcement, right? And there are really 5 phases to splits. We're not going to go into the different phases, all of them today. Maybe we'll do another video on all of the components of splits, since we are in what seems to be a more amenable marketplace for splits. Go figure. COVID, goodbye. Don't care anymore. Wall Street doesn't care. The economy doesn't care. Markets are taking off, and we got more splits of major companies now with COVID than we did before. Go figure. So what the split means for traders is it does cut down our cost, but I want you to keep something in mind. If you had that $100 stock, got split 2-for-1, well, if you had a $100 call, they now take away your $100 call and they give you 2 $50 calls. Oh, Rob, so I'm in the same boat, yes, but I want to make sure that I cover all of the negativity that some traders have about it, not me, but that some do of, well, now I doubled my commission. They're so inexpensive these days. If commission is what you're worried about, you're probably with the wrong broker or you're worried about the wrong things. Commission is the cost of doing business. Don't worry about it for this, right? When stocks split, we're right now in what's called phase 4 of a stock split. It's the run into the split date itself, which comes up in just a couple of days. That run, you'll see, if you looked at Apple up to today's date, you'll see a major move. Yesterday, Apple was down. You look at Tesla, you saw a major move and there was a pullback. Now, Tesla popped today. Why? Well, for another reason, because now another firm came out and said, ooh, we're raising the target on them, right? I think it was 2,500 or something. So they raised the price of where the expectation was. So Tesla shot back up again today. Apple's back up a little bit today as well, right? It's a good marketplace, but that run into the split, which usually goes until about 2, 3, 4 days before the actual split, and then you'll see some profit taking. It may continue to go right into the very end. it may come a little bit sooner, but that's about where we look for it for. Right now, when it comes to after the split, right, you had your one contract, your $100 call, and now you have two $50 calls, or you had 100 shares of stock and now you have 200 shares of stock, right, for a 2-for-1 split. If that's the case, that you have that now, what tends to happen after the actual split is done is volatility tends to drop, price tends to drop, and in many cases you see the stock drop and almost peter out, right? It goes down a little, it goes up a little. Now, in this crazy market we're in right now, we'll see. And I am not sitting here saying, oh no, it's going sideways, so I do nothing. I'm sitting here saying I'm going to look at the chart, and what the chart tells me to do, I will do. As long as volume is supporting the move, as long as the market maker's not ripping me off on the options prices, I will take the trades based on what I see on the chart, not based on what somebody tells me should happen with the stock. And if you remember, Apple's last stock was a major split that they did, and they are not quite back to that 700 and change, but they're up at that $500 level already now. And the expectation is between 2 and 5 years after a stock splits, it makes it back to its pre-split price. By the way, FYI, we're not going to talk about them. If you hear about reverse splits, run, Forrest, run! That's where they split the opposite direction. You had 10 shares, they took away your 10 and gave you 1. Wait, why do I get less? Because they're trying to raise the price because it's getting ready to get delisted. But it goes back to a pre-split price. So within 2 to 5 years, it'll be back where it was. So you lost 90% on that 1 for 10 split. So be careful on what are called reverse splits. So when it comes down to trading it, just in general, with that newsy item floating around about it, can you trade it? Should the average trader trade it? Should someone that's a little less experienced consider trading it? I have no problem with an Apple. I think Apple's a great stock. Option values are not normally extremely overvalued. Bid-ask prices are not too bad. Implied volatility is decent many times, not all the times. Where a Tesla or a company like that is so volatile, has such explosive moves, it's wonderful if you're on the right side. You feel like garbage if you're on the wrong side. So is it okay to trade it? Yes, it's okay to trade it if you've got some experience. Yes, it's okay to trade it if it's a big company that doesn't have these wicked moves. Yes, it's okay to trade it if you understand the various phases of splits and when to trade them. Right now, we're talking about this as we're in that final run before we get into the post-split, where we kind of drop off now and we're waiting for it to split again, right? Waiting for recovery, which could take, again, historically, 6 months to 2 years before it tends to recover. 2 years being a little bit long, but that 6 months is more of what it takes in many cases to recover. Now, that's all before COVID ever existed. Rules just seem to be out the door right now at this point on what goes on with the markets. And I'm okay with that. I know what the rules are. That doesn't mean that I'm going to follow every rule because the market has changed. When the market changes, you have to change. That's one of the greatest things about what we do here at Wealth Builders is we know when things are shifting. We see it for ourselves, all the traders that work with me at Wealth Builders, all of our students who report back and say, hey, Rob, I see this, I see that. They're kind of like, they're like reporters where they're coming back to me and saying, ooh, look what I just saw. We should write a story about this. And that's our back testing. That's where we go back in and start checking things out. When we look at the actual split taking place on Apple as an example, they're a major company in the NASDAQ, in the S&P, in the Dow. They will be losing tremendous status in the Dow, which means Dow is price weighted, price of share. That means mutual funds that are holding Apple stock inside of funds that are weighted to the Dow or the S&P will be selling some of those shares off because they don't have a choice. Right? So there may be some effect in there. I think Apple's a pretty big boy, right? They've got thick skin. I think they'll be fine even with that sell-off. And again, some of it might happen where we see that pullback after the split, and those are some of the reasons why. Now that Tesla and Apple will be more affordable, are these stocks on your watch list? Let us know in the comment section down below. As always, if you like what you've heard, be sure to like and subscribe and hit the bell to keep up with our latest trading content. And until next time, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it, and I will see you at the next video. Remember, you're just one trade away. Folks, thanks for tuning in today. I hope you enjoyed the training. If you did, please be sure to go ahead and give us a thumbs up, and go ahead and click the subscribe button to follow along with all of our great content. And be sure to ring the bell and keep up with our latest training videos. and click down below to see some of our greatest trading videos that we've got available just for you.